Michael Burry's investment philosophy is one of the most fascinating case studies in modern finance, not because it's flashy or built on complex algorithms, but because it's brutally rational in a world addicted to noise and hype. Long before he became the man who shorted the housing market and made billions, Burry was an outsider, a doctor-turned-investor with a skeptical eye and an obsession with truth hidden beneath numbers. What makes his philosophy so timeless is its contrarian nature. While others chase trends, he looks where no one is looking. But how does someone consistently go against the crowd and still come out on top? To understand that, we have to go deep into his mind, his methods, and his understanding of value itself. At the core of Burry's approach is a concept known as deep value investing. Unlike traditional value investors who buy slightly undervalued companies, deep value investors search for the most hated, ignored, or misunderstood assets, stocks that the market has written off as hopeless. For Burry, the key question is not what's popular, but what's priced irrationally low compared to its real worth. It's the art of finding gold in the garbage. He once wrote that he didn't need to predict the market, he just needed to identify where the market had lost its mind. And that's exactly what he did. Before anyone else realized the bubble in housing markets, he noticed something disturbing. Mortgage-backed securities were being treated as safe investments despite being filled with subprime loans destined to fail. His logic was brutally simple. If you know the real numbers, you don't need hype. You just need patience. This principle extends far beyond the housing market. Burry believes that most investors don't truly analyze data, they react emotionally. They buy because prices go up, and they sell because prices go down. It's not analysis, it's herd behavior. He once said, "The greatest investment risk is not the market's volatility, but your own emotions." For him, controlling emotion is not just an advantage, it's survival. In the early days of his hedge fund, Scion Capital, he applied this mindset to pick stocks no one wanted. While the market celebrated dot-com darlings in the late 1990 seconds, Burry quietly bought undervalued companies with strong balance sheets. When the bubble burst, his portfolio thrived. This is the essence of his deep value belief, that real investing happens not in moments of excitement, but in moments of fear. But here's where his genius truly stands out. Burry is not merely a numbers man. He understands psychology, both his own and that of the crowd. He knew that even if he was right, markets could stay irrational longer than most investors could stay patient. That's why his approach blends analytical precision with emotional discipline. When you look at his strategy, it's clear he treats every investment like a scientific hypothesis, not a gamble. He builds his case on data, challenges his own biases, and invests only when the evidence is undeniable. In a world where hype drives decisions, this method feels almost rebellious. But let's pause and ask, could this philosophy still work today in a market flooded with social media trends, meme stocks, and instant gratification? To answer that, we need to look at what makes deep value investing timeless. Burry's philosophy relies on three foundations: patience, skepticism, and conviction. These are not traits that thrive in modern markets, they're rare, even uncomfortable, but that's exactly why they work. Let's start with patience. In the era of daily trading updates and TikTok stock tips, patience feels like a relic, yet Burry sees it as a weapon. He's known for holding unpopular positions for years, often enduring criticism, mockery, or even investor withdrawals. During the housing bubble, he faced intense backlash from his own clients, who thought he had lost his mind betting against real estate. But Burry knew something they didn't. The data was undeniable. Every delayed payment, every faulty mortgage, was another clue that the system was cracking. The lesson? Truth takes time to reveal itself, and the market punishes impatience. The second pillar, skepticism, is what keeps him grounded. Burry doesn't believe in narratives, he dissects them. When everyone says, "This time is different," he assumes it's not. He reads not to confirm his beliefs, but to challenge them. This relentless questioning is what helped him identify irrational exuberance long before others saw danger. He has often said that his success came not from superior intelligence, but from refusing to accept the obvious. The final pillar, conviction, might be the hardest of all. Because conviction means standing alone, sometimes for years while the world laughs. It's the courage to be right and unpopular at the same time. Burry's career is filled with moments of isolation. Whether it was shorting the housing market or avoiding tech hype, he has always been comfortable being the outlier. In his view, if you agree with the majority, your returns will also be average. This contrarian spirit forms the backbone of his investment philosophy. But there's another layer that makes Burry unique: his emphasis on fundamentals over forecasts. He doesn't try to guess where the economy's going, he focuses on what's provable today. To him, valuation is like anatomy. If you know the structure, you can diagnose the health. He digs deep into balance sheets, cash flows, and debt structures, searching for inefficiencies and mispricings that others overlook. It's not glamorous work, but it's real. And real value, he believes, doesn't need hype, it needs recognition. Yet, the irony is that markets rarely reward truth immediately. This is why Burry's approach is psychologically demanding. Imagine holding a stock everyone else thinks is dead money. Imagine seeing it drop further while you believe it's undervalued. Could you stay calm? Could you trust your analysis when the world mocks your patience? This is where most investors fail. Not because they're wrong about fundamentals, but because they can't endure emotional discomfort. Burry's advantage is not just his intellect, it's his temperament. He once said, "Investing is not about being right, it's about being patient when you're right." In an environment driven by hype cycles, this mindset is revolutionary. And yet, it raises a deeper question. Is deep value investing still possible in a world where information moves faster than logic? Burry would argue yes, but only for those willing to think differently. Technology hasn't changed human psychology. The same fear and greed that drove bubbles a century ago still drive them today, they just happen faster. Deep value investing works because it exploits emotional overreactions. When panic hits, prices detach from reality. When euphoria takes over, logic disappears. Burry positions himself in those moments of extreme sentiment, where rational analysis regains its power. But to apply this philosophy today, investors must unlearn their addiction to noise. Burry famously avoids mainstream financial media and social media chatter. Instead, he immerses himself in data, SEC filings, and primary sources, what he calls signal over noise. This focus allows him to spot hidden asymmetries, the small cracks in the market's illusion. The 2008 crisis wasn't just luck. It was the reward for years of studying mortgage data others ignored. Today, he continues this approach, analyzing overlooked sectors, warning about speculative manias, and betting on mispriced opportunities. His recent positions in water, farmland, and small-cap value stocks reflect a consistent theme. Look where no one else is looking. But Burry's philosophy goes beyond numbers. It's a moral stance against intellectual laziness. He criticizes investors who follow trends blindly, calling them momentum chasers. For him, markets are not games of prediction but puzzles of misperception, and solving them requires humility. He once noted that being wrong is part of the process. What matters is how you respond. This acceptance of uncertainty sets him apart from ego-driven traders. He studies errors as deeply as he studies successes, constantly refining his framework. To Burry, markets reward not intelligence, but adaptability. Yet his philosophy also carries a warning. Deep value investing is lonely. It demands emotional resilience, long-term focus, and tolerance for pain. Many who try it fail because they underestimate the psychological cost of being early. But those who master it can achieve extraordinary results, not just financial, but intellectual. Because to practice deep value investing is to practice independent thought. It's an act of defiance against a world obsessed with immediacy. So, as we reflect on Burry's philosophy, the question becomes, do you have the patience to be right too soon? Michael Burry's story isn't just about financial success. It's a mirror reflecting our own psychological weaknesses as investors. His deep value philosophy forces us to confront uncomfortable truths about time, discipline, and courage. It's easy to call him a genius, but what makes his method remarkable is how learnable it is. He doesn't rely on secrets, algorithms, or insider tips. He relies on principles, patience, skepticism, and courage. Principles anyone can adopt, but few will. Because while everyone wants Burry's results, few want his solitude. The real takeaway from his philosophy is not how to find undervalued stocks, but how to think independently when it matters most. In a world that rewards speed, he rewards slowness. In a market that values popularity, he values truth. His approach reminds us that successful investing is not about predicting the future, it's about recognizing the present more clearly than others. As he once said, "All my success came from looking where others wouldn't." That's the essence of deep value. It's not a formula, it's a mindset. And it's as relevant today as ever. Whether you're a beginner or a seasoned investor, the lesson is the same. Stop chasing hype, start seeking substance. Because somewhere, hidden beneath the noise, there's always real value waiting to be discovered if you have the courage to look. And that brings us to the end of today's journey into the mind of Michael Burry, a man who proved that conviction, patience, and deep understanding can outsmart even the loudest markets. His story isn't just about money. It's about courage, independent thought, and the power of standing alone when the world disagrees. So, What do you think? Could you hold your ground the way Burry did when everyone said he was wrong? I'd love to hear your thoughts in the comments below. If you found this story inspiring or thought-provoking, make sure to hit that subscribe button and turn on notifications so you never miss our next deep dive into the world of legendary investors. Thanks for watching, and remember, in investing and in life, true value often lies where no one else is looking.